Thank you for all of you who joined us. We're having a large turnout today. So again, we thank you for taking time out of your busy schedule to learn about this incredible product.
Again, if you want to watch us live streaming, it's our address to watch it absolutely live, www.brokersalliance.com/V as in victory webinar. So I think you're going to, webinars, that's plural. So www.brokersalliance.com/V as in victory webinars, plural. So just get that in there, webinars, yes. All right? Well, Joe, let's talk about it. Today we're going to introduce again to a lot of our first-time listeners and attendees a bundled product, a packaged product. And I have to say, one of the great marketing aspects of the product, not besides the features, is the actual bundling. And everybody likes to sell bundled products right now, Joe.
Sure. Everybody thinks that they could get some value out of that, and that's absolutely true. And you know what? This is such a unique product on a term chassis that no one else is doing it.
Well, actually, the thing that freaks me out is that we're on a 40-year term chassis. 40 years.
Right. You could get 40 years. You could get 20 years, of course, and 10 years. But you could also get a 40-year guaranteed level term product with all of the benefits that we're going to be talking about.
Well, we want to introduce Western Reserve Life. They've really partnered with us on this proprietary product. It's been huge for a lot of our agents. I mean, our app count is just increasing exponentially, not even geometrically, exponentially. And on top of that, this product is called the Alliance Solutions Advantage Term. And we're going to have some sales strategies today to go along with some of the inside policy issues that we want to highlight today. Joe, when I think about it, you've been in this thing, you and I have been in you over 30 years and me almost 30 years. Have you ever seen a product like this on a completely packaged chassis like this?
No, I haven't. I mean, there are some universal life products out there that will have a chronic illness rider to it. Again, that's on a UL product. And there's a number of fine carriers who have added that. And again, the idea of bundling is what is getting the attention of the clients, because they know they need these coverages, right? They hear about it all the time. They experience their friends and their relatives who actually have chronic illness scenarios and realize that that's something that they could use.
Well, Joe, you have a couple of examples and testimonies, and if you want the video on these testimonies, which we think are a major closing aspect of this whole thing, why don't you introduce a little bit of the concept of why we put this video, and they can order that video of these two testimonies.
Absolutely right. And again, we're going to show you on the screen, and you actually have a 6-minute video, which when you show this to your client, that alone, right then and there, can sell this product for you. So we have this all bundled together in an email so that you can actually take your notebook, computer, laptop, even your iPad, and show your client testimonies of Ron, okay? And Ron is a painter. And he's just he's a small business owner, owns his own business, has a wife, couple of kids, owns his own house, has the bills, and unfortunately was struck with lung cancer.
And Joe, these aren't actors. These are real people.
That's exactly right. And again, we're just showing you pictures, but we do have a 6-minute video of Ron. Now, Ron owned a life insurance policy, and he owned a life insurance policy with Alliance Term. And he said that he jokes about it. He goes, he didn't make too many smart decisions in his life, but this is one of the smart decisions that he did make. And what he did is he bought this policy with the living benefits. And when he had that diagnosed cancer, lung cancer, he didn't know what to do. He was like, he couldn't work. Surgery, all the stuff that goes through, chemotherapy, all the things that you have to deal with. He dealt with it, but how did he survive financially? He was able to actually get money from his life insurance policy.
Tax-free.
He did tax-free, income tax-free, and interest-free, and he doesn't have to pay it back. So that saved his financial life. He didn't die from that episode.
Well, that video's available. All you have to do is request it. We're happy to send it out.
Just real quick, Sophia, she's a school teacher, 38 years old.
38?
38 years old.
And she had an issue?
She had a heart attack.
Oh, my gosh.
Right after her third child. So these are real life scenarios that every agent can talk to their clients about, because they all know somebody. Again, real quick, Sophia, 38-year-old school teacher, after her third child suffered a heart attack, her husband had to get a leave of absence. Why? Because they had 3 kids. And she's just had triple bypass.
Wow. At 38.
At 38.
Wow.
Again, they were able to utilize the living benefits of this life insurance, term life insurance policy, right, to be able to get money to be able to pay the bills and all the things that happen, unfortunately, when you're stricken with an illness.
Well, Joe, we were looking at part of our slide presentation talks about the last 5 years. I'm sure our listeners and attendees today have no family members, friends, neighbors, work associates who have undergone some kind of critical illness or catastrophic accident. Actually, Joe, you went through some of these things yourself.
Yeah, and I think that's why I'm so passionate about this product, Steve. Yeah, in the year 2000, I had a cancer episode, and it took quite a while for me to recoup from that. Not only physically, but it cost me $150,000 out of my own pocket. Now, I chose to use the Mayo Clinic, which again, they have higher than normal, what they call usual and customary charges. And for those of you who sell health insurance, you know what that is. But over a 5-year period of time, I had to pay out $150,000.
Yeah, net. Now, you still had to pay taxes on top of that.
Exactly. And again, how many people does that happen to? Every single day, statistically, how many people are being, stricken by some of these illnesses?
Well, yeah, when you're looking at some of the stats, look at this stat, and these are not our statistics. We're pulling these from U.S. Census Bureau and other statistical areas. Every day, or it seems like every 40 seconds, it says someone in the United States has a stroke. Now, we were just reading an article in I think it was USA Today, wasn't it, Joe, or the Arizona Republic, where they were talking about some younger people now are having strokes at this level.
Absolutely correct. And I do believe we actually have that article that actually shows where younger teenagers are spending time in the hospital due to strokes.
Due to strokes.
Strokes.
I know. I can't believe it.
And a lot of it has to do with obesity. And actually here on the screen, you'll be able to see more people are winding up in nursing homes. And again, this isn't stuff that we made up, right? This is from the AP, and these are statistics that are happening to younger people just as well as older people. So when you have younger families, don't think that a chronic illness such as a nursing home program isn't going to help them. It can.
It can, and if you want the article again, just request it and we'll send it right to you. It's a really good closing piece.
And in fact, after this presentation, everyone who's attending will get all of the information that we're talking about today and more.
Including the video.
Including the video.
I love that.
That's correct.
And remember, and Joe mentioned about his own personal, challenge with cancer. Every 30 seconds, a new cancer is diagnosed in the U.S., and every 26 seconds, a heart attack in the U.S. So these events occur not by the day, but by the seconds. And I think you need to start thinking about that we're offering something bundled, and by the way, from a marketing point of view, we are ahead of the curve right now. This is really, you're one of the few people that are really selling this, knowing about this. Every day we're saying, what is this new product?
Well, as you said, this product is being sold substantially right now. It now is our second leading product sold by application count. And as agents use our presentation, things that you're seeing on the screen right now is actually a part of the presentation that you could go through with your client, okay? Asking them, do you have the old term insurance or the new term insurance? So you could get them to think about all the things that will lead to why you need to buy this particular policy, which the agents actually are liking it, right? This is a very noble profession, selling life insurance, and then you have the living benefits attached to it. But the premiums that people are paying versus the typical term insurance are substantially higher. So therefore, the agents are making more money selling this particular product. They're offering a better bundled product.
I like the idea of looking at real true life stories like the ones in the video, like your own story, Joe, and as well as asking you, do you not know somebody yourself that's been admitted to a long-term care facility or had to have some kind of medical attention because of chronic illness. And when I'm looking at the ability to exercise my right and feature on this policy, especially if I had a critical illness, I need to only, I need to not perform 2 of the 6 daily living activities.
Right. And you think about that. You think about young people, right? Accidents, right? Think about when you think about the activities of daily living. If somebody, breaks their femur, breaks their leg, right? And it could be somewhat severe. It could be an accident due to a recreational sporting activity. It could be due to, God forbid, a car accident or something like that. When you think about the activities of daily living, somebody with a broken leg, right? Transferring is one of the activities of daily living. And if you're in a wheelchair or if you've got this big cast on your leg, well, how do you get from one area of the house to the other? That's difficult. That's transferring. That's unable to perform one of the activities. Well, what about bathing? How are you going to, right? So there's an activity of daily living. They're really easy. And this policy, I think you brought it up last time, that how is this underwritten? I mean, we're talking about a critical illness policy attached to a life insurance policy and a chronic illness policy, such as long-term care. How is that typically underwritten versus what's going on right now?
Oh, yeah. I mean, it's exceedingly simpler, and we're going to get into that in a moment. Joe, when I'm looking at the 2, all you have to do, the qualifying event that will trigger the benefit is you can't perform these 2 out of the 6 activities of daily living. When you think about that, of course, I kind of draw back when I think about if I can't bathe myself, who's going to do that for me? That's a little hard concept for me to wrap my head around right now.
That's right.
Personally, but I want to be able to give my client a full gamut of life events packaged in one policy that can cover all this. And the question is, Joe, is if I tried to go out and get this individually, this would be some serious money.
And we're going to go through that as well. The cost comparisons about this are absolutely amazing. When you talk about the cost of long-term care, when you talk about the cost of critical illness, and you think about the baby boomers, and what do we know about how many baby boomers today are reaching that Social Security ripe old age of 65? What was the statistic?
Well, it's huge because everybody born in 1946 can take constructive receipt now. Think about that. And Joe, you and I are we're just outside the perimeter of that. We're baby boomers. We are the ARP nation now. We're there. And look at all the things that we're looking forward to. Not only am I getting carded because I'm older now and I can get the Denny's discount, okay, or my but now I'm starting to think, wow, I need to start thinking about long-term care. I need to think about how I'm going to qualify for it, how am I going to afford it.
And these are all, again, this is agent related. These are statistics that we have put together in this PowerPoint to be able to allow you, the agent, to go through these things with your client. They know about it, and what we're going to do is show them ways that they can now afford to do this. Well, that's the key, affordability. You've got 10,000 people a day turning age 65, right? Wow. And you think about all the wealth transfer. They talk about all the wealth transfer coming. But what about all the health conditions? What about all the health issues that people are coming into, right? And they have those medical problems. Where are they going to get the money, right? Where are they going to get the money to pay for these things as they get older, right? And have these situations. And this is where this plan is so powerful and so affordable that the clients get it. They get it. So we're really happy to be able to give you this presentation after this show.
In fact, actually, this is one of the huge reasons why people, how I don't buy long-term care. I mean, the money, the outlay is so huge. But there's other reasons here. Like, there's some myths out there. You know what I'm saying, Joe? There's myths out there. Like, this is not going to actually happen to me.
Right.
Or my kids will take care of me. Right?
How noble is that? But where are the kids going to get the money, Steve?
Well, they got to have money. And, I think about this. We're the first generation, Joe, where we're not only taking care of our kids, our grandkids, but some of us are taking care of our parents.
Right.
We never thought that was going to happen.
Exactly right.
So we're thinking about this. And now what happens really, the thing that amazes me most of all is the biggest reason that we don't address this is because most agents don't bring it to the client's attention.
Absolutely right. And a good reason is they don't think that the client, and possibly so, can afford it. They can't afford that coverage. So therefore, they're not even asking their clients to buy it.
Well, I'm looking at this statistic. This comes right from the Wall Street Journal. It says every couple turning 65, there's a 70% chance of one of them will need long-term care. 70%. That's a shocking number to think at age 65. There's a good chance that you're going to have an LTC event.
And think about this, Steve. Somebody who's in their 40s, 45 years old, right? And they could buy a 40-year term, right? So that takes them to what? Age 80. Age 80. And what are the statistics you just said?
Right.
But by the time they're 65, so you buy the policy when you're younger, right?
Because it costs less.
Because it costs less.
Yeah.
You buy it now, and it carries you through.
And we're going to get into this because you'd think that this is going to be a really large premium and a big increase, but it's not as bad as everybody thinks it's going to be.
No.
And Western Reserve's done a few cool things, we'll talk about that a little later on, that'll really mitigate the total cost all in. I want to do another quote from Business Week. It says, as the baby boomers age, the number keeps rising. And we are the largest demographic. I mean, just period. Nobody's close. And now experts say 65% of the people over 75 will need, not partly, will need long-term care coverage. And the average facility stay for that group is 36 months.
That's right. And again, everything that you're going to find out about this product, again, we're going to send it to you. But I want you to know that, if you buy a $500,000 term insurance policy, you now have access to $450,000
of living benefits.
Right. Available to you. That's, at 2% on this particular product, 2% per month, right? 2% of the death benefit. 2% of $510, that gives you up to $10,000 a month that you have access to.
And remember,
on a term chassis.
The LIMRA studies used to be able to say, and I'm sure it's less now, that 2% of all term contracts end in a claim. So when people get sick, they have chronic illness, a traditional term policy only pays at death. This is why we're talking about living benefits on a term chassis, because the odds of you actually doing this, and by the way, talk about renewals on this, and we'll get into that later on too. This is a product that's going to stay online.
Yes.
The persistency is going to be huge, and client retention is going to be huge.
Absolutely.
By the way, that stat I read from Business Week didn't even include the ancillary cost. That was just the stay, not for home care, medical. So there's a lot more that we're bringing up here. I'm just addressing the basics.
And when your client applies for this policy, again, they're applying for it as a life insurance policy. They're not being underwritten for a critical illness policy, which again, a lot of people don't know that there's you could buy a critical illness policy. There's a number of carriers out there that offer just critical illness, and there's companies, of course, offer just long-term care. But this is available, and that's what's key.
I'm looking at this LTC report too. It says 97% of people over age 85 require assistance in their last years of life. That is a stat and a half. I mean, I'm thinking about this. Just the other day at the grocery store, the young man said, "Sir, can I help you carry your groceries out to the parking lot?" And I said, "I'll see you in 10 years.
That's right.
Not today, but maybe in 10 years. Now, here's a stat that, and by the way, I can't believe I'm actually quoting Jane Bryan Quinn. Generally, a person that's not that endeared to us, right?
Right.
But think about this. Even she says, and she brings up a stat that I was kind of surprised on. It says here that singles are especially at risk. Now, I was like, well, married couples I get, kind of, I understand that. But singles are especially at risk. And they're usually not someone who can properly take care of themselves because they have no one.
Sure.
So that's an issue. She says the same is true for wives who tend to outlast their husbands, which would be an understatement. I mean, you know how you look at the statistics at the end of the 20th century, all the men died according to the 1980 CSO, about a year on either side. But the women blew past those mortality tables. Right. And how many second-to-die contracts did we actually pay claims on? Hardly any, all in. So this is a really true number from Jane. And for the first time, I could say, oh my gosh, I'm quoting Jane Bryan Quinn, and I'm okay with that.
Well, there's another person that we have on the screen right now, an article that she wrote from Terry Savage.
Oh my gosh.
And Terry Savage wrote an article called "Long-Term Care Combined with Life Insurance Solves Problems." I mean, this was in January, right? I mean, this product is relatively new. And here, even these somewhat anti-insurance people who write articles about the negative parts of life insurance are now kind of saying, look, long-term care combined with life insurance solves problems. On a term chassis, combined with critical illness is fantastic.
Yeah, you have to kind of circle your wagons. A lot of these authors for a long time didn't understand the features, but now they're actually starting to understand, hey, these are huge policy provisions that can benefit clients if they take advantage of it, especially right now when they're healthy.
Exactly right.
Well, there's a lot of reasons that people need protection. I'm looking at the Harvard University study. It says 50% of all people entering a care situation are penniless within 1 year. So having a chronic or catastrophic event, generally, if your health goes, so does your wealth.
Right.
And that's a huge number.
So again, agents out there listening, all of this is available to you. All of these statistics are there. You can just flip the slides, go over it with your clients. They'll probably be shaking their head knowing, right, of, Aunt Jane or Uncle Jim or somebody, parents, who have these situations. And again, all it's going to do is it's going to remind them, wow, it can happen to me. Statistically, it could happen to me.
Well, think about
the
this.
cost of it.
Here's another stat before we go too farther. I didn't even know there was an This comes from the LTCIP Academy. I didn't even know there was such an institution.
Sure.
I mean, that's kind of weird. But they say by 2018, which is only 7 years away, Joe, 2018, that a private room is going to cost $500 a day. It's like two something now, right? 210, 215 change. It's going to cost $500 a day. That's 188 grand a year.
Right. And you know what? Home health care is going to be more prevalent. And the neat thing is with this particular policy that I could access 2% of my death benefit, right? Doctor says, all I need is a doctor's note that says I cannot perform 2 of the 6 ADLs. Now, I don't have to go to a nursing home. I don't have to have a nurse take care of me. All the doctor has to say is, I can't perform 2 of the 6 ADLs, and a child, right, a spouse, a friend can take care of me in my house, and I could have access to dollars to help cover those things that I've lost because I can't maybe work, or I need to pay somebody to help take care of me.
Yeah, the whole issue here is coverage. You're indemnifying what now statistically looks like an inevitability.
Yes.
I mean, this isn't like maybe the stats are low. I think it's inevitable, and that's why it's so important to pick up on this now. And you'll be cutting yourself, from a marketing point of view, you'll be cutting yourself out of the pack of termites that sell term only, because now you're going to add some features onto this. And of course, Joe, I always like the part about being comped a little bit better, but we'll get to that in a moment. How do we solve this whole thing? It's like we look at right now access to funds. Let's say if you had an event, you had to go maybe surrender. What if you had to sell off your stock? What if you had to access CDs with penalties? What if you had to go into your retirement fund early before 59 and a half?
This is actually the most, I like this part of the presentation more
know
than
you do,
anything.
Joe.
I really, I was just laughing and having fun when this was created. But, how do you solve this?
Right. How do you
Bucket
do
of
it?
money.
Right.
Right, Steve? Right? You don't have to worry about long-term care, critical illness, right? You don't have to worry about that if you just had a bucket of money that you could just go ahead and just grab, right?
Joe, I always thought where I have my money and my stocks and bonds. I never thought it was in a bucket. Now you say I can get it in a bucket.
Well, somebody asked me the other day, actually during the presentation, said, well, can we call it a pool of money instead of a bucket of money? I said, absolutely.
I guess if I want to swim in it, I guess that's okay.
Manna from heaven. I mean, it could be whatever you want to call it. But you can, if you had the money available, you can go ahead and take care of all of these things. So what I like to say is, we're actually starting to save a little bit more here in America. We were spending for so long, we're starting to save. So we talk about a bucket of money, and I've been talking about $500,000, and people save in banks, they save with their stockbroker. And how long is it going to take them, right, the average American out there, to go ahead and save $500,000 to be able to use for this some of these events? Long time. So, I want you to go to that your banker, right, or that friendly stockbroker who's going to take you to retirement heaven, right, and say, look, I'm putting money into your institution, right, but I've been looking at some statistics here, and I may need to get some large sums of money before I could reach that $500,000 goal, let's say, of saving. So what I want you to do, Mr. Banker, Mr. Stockbroker, is I want you to have this bucket of money available for me in the event ahead of time this occurs. And then I want you, in addition, right, I want you to tell them that you want it interest-free, okay, tax-free, and that you don't have to pay it back. Okay, so, right, isn't that reasonable?
What planet are you on, Joe? I mean, what company's going to be able to pull that off?
A life insurance company. And that's what we do. We sell life insurance.
You know, I got to say, Joe, just think about this. Generally, every time I hear life insurance, we're the lowest form of vocational, in the financial community. We're at the bottom end, and we're the only people at funerals bringing money tax-free, and now we're the only people at a catastrophic or critical illness that are bringing tax-free monies.
But yeah, think about a life insurance policy. It's really not life insurance. It's death insurance, right? That's right. When most policies are sold. In the event that somebody dies, they pay their beneficiaries the money. But when you think about a bucket of money that this insurance company has allowed them, right, to access a bucket of money. We had a little distraction here.
Yeah. But it wasn't the fountain.
No.
Well, I'm looking, Joe, I'm trying to look at the way that American families are going to be able to afford this, and they're not going to be able to pick this off without this policy. And this is one of the premier contracts that are out there. You just heard Joe say that we've been selling. This is our second largest app count product. And by the way, Joe, 30 years, have you ever seen a product go from ground zero, scratch operation product to the kind of numbers that we're selling?
No, I haven't.
And, you've seen it all.
In a short period of time. I mean, we actually introduced this in June of last year, and we haven't even really scratched the surface. We haven't even begun to get this out to the agents. You know, that's why we're holding these webinars. That's why we're having this video, so that we could continue to educate our agents as to the products, the product designs that are available to you through Brokers Alliance.
Now, look at these numbers, because Joe, you've put together a basic idea just so we can walk you through the math, because this is all about, is this a good deal or a bad deal?
Sure.
Is this have economic validity, or is this just really an expensive term contract?
The clients today, you know, they've heard of long-term care, right? They know that there are insurance policies that could be purchased to cover long-term care. And, you know, critical illness is very popular in Europe. It hasn't really reached its capacity here in the United States. And you know why? It's pretty expensive. So what I want to show you is an example of rates. And you know, again, when we think about term insurance, people are always looking for the competitiveness of it, right? And when you look at this term product, this is so competitive, it's unbelievable. So what I did is I took a 40-year-old male non-tobacco, right? And as I say, he's going to buy $300,000 of 30-year term. Now, you could go out onto the spreadsheets, and you can find that for about $43, $44, $45.
And we sell it, and if you want to buy it, we'll sell it to you.
$45 a month, sell it all day long, right? Now, I went to look to see what long-term care would cost a 40-year-old. And we have the ability, right, at Brokers Alliance to be able to, now there are fewer and fewer companies now offering long-term care, by the way.
That's for sure.
And actually spreadsheet to find the lowest cost long-term care. So I said, all right, I wanted to find $6,000 a month of long-term care. And now where did I come up with that? And because it's comparison. Remember what I said earlier, that when you buy a life insurance policy through this WRL Alliance product, and if you have a long-term care issue, chronic illness, they'll pay 2% of the death benefit. So 2% of $300,000 is $6,000. So John Hancock actually had the lowest cost at $72.90, and I want to tell you real quick that number is no longer available.
That's right. That is no longer available.
It's about $84, and I was traveling, so I forgot to change the slide. But let's just say it's $72.90. All right. Now, so buying a very low-cost term insurance and a long-term care policy is $116.39 a month, and this 30-year or 40-year-old is covered for some nice-sized life insurance, right, and some long-term care. Now, he may not use that long-term care policy, right? If he just bought that by himself, or what happens if he died, right? He's been paying for long-term care, and then he died. So I have a long-term care policy, and I died. What is that long-term care policy going to do for my beneficiaries?
Nothing.
Nothing. Okay. So then I went to and I found the most competitive critical illness policy, and that happened to be a surety life. So a $270,000 bucket of money for heart attacks, stroke, cancer, right? Renal failure, Lou Gehrig's disease, some of the things that are defined as critical illnesses. And that bucket of money, which again, 90% of the death benefit is what this policy, up to 90%. So 90% of 300 is $270,000. It would cost the client $217.53 for that $270,000 bucket of money.
So far we have 3 products that we're actually comparing apples to apples.
Right, 3 products. Total cost $333.92. All righty. Now, let's take a look at a 50-year-old. And I'm going to go through this quickly, but $500,000 of 30-year term, $175, one of the lowest cost term rates in the industry, right? Takes that 50-year-old to age 80. $10,000 a month long-term care, $160. $450,000 bucket of money, $556.42. And when you think about that price, and you think about, I think about utilization, right? Because if something happens often and you have to insure against it, right? If you have a lot of tickets or a lot of crashes on your car insurance, what happens to your premium? I mean, it's, right?
Go up, yeah.
So almost $900, right? And I'll tell you what, if they can afford it, if your client can afford that $900 for these 3 unbundled coverages, not bad if they can afford it.
Right.
Now, let's compare. For the most part, a product with term life and living benefits, right? And part of the presentation says that you're a licensed agent in that state. And again, we're going to talk about that comparison of that 40-year-old with the same type of coverage, all right? $300,000, $6,000 long-term, up to $6,000 long-term care, up to $270,000 of money. And that price is $66.68. So a 40-year-old can buy the whole package for $66.68.
The leverage on this issue is huge because we're always trying to sell a value proposition. This is a contract that actually has bundled several value-added issues that everybody, according to at least these statistics, we're going to have one of these challenges.
Yes.
Before we die, we're going to have one of these issues, living events happen to us.
Now we have a couple of health agencies that are retraining their clients, and they love this presentation because it gives those agents, those health agents, a track to run on, and it helps them learn more about what we do here as life insurance agents. And we know, right, that agents are using this and making sales off of this presentation.
Well, Joe, you just brought up a thing. If you've been in the medical field, and especially after Obamacare and everything else, now you're saying, boy, where am I going to go now with my career? Where am I going to make that transition? This is an excellent transition or segue product because you already have some good language. You already were brought up in that side of the fence on the medical. Now you can make your move over to this. It's kind of a segue or a bridge to our part of the practice.
Sure. And again, real quick on that same 50-year-old, Steve, being able to offer the 3 type of coverages in a term product. Okay, again, that's what I want to emphasize. This is on a term product. So remember that almost $900 per month, which it is over $900 if I get the illustrations done. $224, Steve, a 50-year-old going to age 80, right? You got a term product going to age 80. Where were those statistics at age 65? What, 70% of it
70%
will have some form of event that they, right? Again, we're offering a bucket of money. An insurance company offering that bucket of money. So again, you can see the difference and the cost savings. And what I like to say is you're offering your client a wider net of coverage when they buy this Alliance term product because it's just not when they die. We also, to help again in determining how much life insurance somebody needs, we've added to the presentation a little quick like survey, all right, some stats, just a way something to run on, to be able to determine how much insurance someone needs.
Very basic data collector. It's really excellent, and it'll get you in the game in a few seconds.
Yeah, and just again, real quick, what you see on the screen here is just a client. Let's say they're making $6,000 a month. of income, and they all in have $500,000 of life insurance. That's maybe a personal policy that they have.
Yeah, maybe
Group insurance. And again, LIMRA is our kind of our association that kind of tracks insurance buyers. And we are right now at the lowest level of households in the United States with any life insurance. Any.
Wow, that's shocking.
So some people don't have any life insurance. So we're saying that this person happens to have $500,000.
By the way, the #1 cyber ad that I see on CNN Money is always about a little baby saying, "What? No life insurance?" Have you seen that cyber? It's on all CNN's money section. So that's a true ad.
So again, this is a little track to run on. Again, this the little formula here will actually show that $500,000 of life insurance invested, right, at 7.35%. I was being a little generous here, okay, would produce $3,000 of income. So if somebody bought life insurance and there was a death and they were making $6,000 a month and they got $500,000 of death benefit from a life insurance policy, invested at 7.35, they would get $3,000 a month of interest off of that. Now, do you think there's some final expenses that need to be paid off of that $500,000?
I'm sure.
Right? Bills, mortgage, kids still have to go to college, right?
So we're just talking about the basics.
Yeah, this is a very quick study, right, to show a client how much money that they can, or how much money they actually need in the event of a situation. So again, you know, our goal here is to again introduce a product that, again, the majority of the insurance agents in the United States don't even know exists.
Right.
And what we're going to do is we're going to get this product out to the streets, to all the agents. We have access to how many agents? I think, Steve.
Nationwide.
Yes.
Well, it exceeds 250,000 right now.
Right. So right now, 250,000 agents are going to have the ability to see this video to find out about this product. So get licensed. We're going to send you at the end of this video and a webinar, we're going to send you an email. And this email, Lisa, if you could put that up. This email is going to have everything that you need to get started. All right, and Lisa's going to pull that up so that you'll see it. And we're going to send this out at the end of this webinar. So this is what you should look at in your email box after it. Now, questions and answers or applications, other applications, Steve, that we can use for this.
Yeah, I think when you're thinking about presenting to your client a bundled product like this, it has so many multiple applications. It speaks to so many life events. I really want you to start to put this is a heavy arrow in your quiver of sales. This is not just one of those ancillary things, well, if I run across it. This could become one of your core competencies. And we say, if you get to read this presentation, we'll send it all to you. Everybody that's attending, so you're going to get it all. If you can just try to understand this, I mean, I like what Western Reserve did. They went one step further. They actually took the policy fee offline on this contract, right? I mean, they don't.
It's commissionable.
Yeah, it's all commissionable. Oh, I'm getting ripped off, or I'm not getting paid on that. I love that. And the other thing is they do a swab for some of the older guys. You know, sometimes I don't want to pee in a bottle. I don't want to take blood. No, now it's called Q-tip heaven.
You know what? I'm so glad. In your mouth. I'm so glad you brought that up. And again, we probably could be here for 2 hours talking about all the little things, all the good things that this company has built into this product. But you're right. You could actually buy this on a non-med basis. All right, no blood, no urine, no. They're not going to write your doctor. So if you're 50 years old or younger, you could get up to $200,000 of term insurance without that. And like you said, just a little. It's almost like a Q-tip, and you put it in your cheek and gum.
Yes, I think the official word is swab.
Yes, it's a swab. And you put it in a hermetically sealed envelope and you ship it out.
Hermetically sealed.
Hermetically sealed. Now, a little laugh-in stuff back in the day. And they're turning these around in 7 days on the non-med deal, on a non-med product.
Unissued. Wow.
Yeah, from the time that they have the application and they get that swab, it's 7 days that they're turning that around. Now, even on the underwritten, averaging it in, it's only 22 days. So they're doing an excellent job of getting these policies in and out the door and in your clients' hands.
Because they separate their underwriting. Isn't where we're sending this different than the normal Western Reserve?
And another good point. A lot of you may have already been appointed with Western Reserve Life, and they do all their business out of Florida. This is totally proprietary. This is totally different. This is actually out of the headquarters in Cedar Rapids, Iowa. We have our own underwriting department for this product. We have our own case managers at the home office. So you could call the home office, you could ask for an underwriter, you could talk to the policy owner service people, right? And that whole group is dedicated to Alliance Term. So I'm really excited about that.
And remember, if you say, boy, Steve, I really wish I could see this again, we're going to post this out on our website. We'll give a little on the front page, homepage. We'll tell you exactly how to get there. If you want to hand this over to other people and say, hey, I'd really like some of my agents, maybe you have a downline agency, you can go on our web and have them go through this entire presentation that we've just done. You'll get all the videos, the presentations, those articles that are really huge. Those are great support articles. And we'll be able to package all of that. And if you're not contracted with us, hey, it's a simple call to 1-800-290-7226, and we'll make sure that happens for you.
Sure. And now we have a lot of questions.
Oh, yeah, a lot of questions.
I'm sure. And as Lisa pulls that up for us, and Lisa, thank you. You're doing a great job of keeping up with us. And again, I really do love this product. I do have some personal experiences, but I know how well this is being received by the clients. So when agents bring this up, and I had one agent call me, and he says, you know what, Joe, all I do is I ask my clients, do you have the old term insurance or do you have the new term insurance? Right? Do you have the old or do you have the new? That was so profound to me. I put it in the site. I put it in the webinar, right? So that when you go through this PowerPoint presentation, right? Let's see what happens when you do live. You get ambulances. Somebody probably needs critical illness, or
I'd run down there and try to sell it if I could close.
Non-med.
Non-med.
It doesn't show up in the medical records yet.
I can just see myself swabbing the guy in the ambulance. Yeah.
Okay. As far as the questions are concerned, how long does the term issue? Again, this is you could go a 10-year, 15-year, 20-year,
30,
40
and
40 years. That's correct. I think, let me see, on this particular product, a 75-year-old could buy a 10-year term on this product.
Yeah, in fact, actually, we have all the statistics. I'm looking at the issue ages right now. Depending upon how old you are at the time, like, for example, 40-year caps out at age 40. So you could only get it if you're there. But a person who wanted 30-year term, that'll go up to 50. A person who wanted 20 issues to age 65. And then 15-year all the way up to age 70. And then 10-year, of course, goes all the way out. So who could buy a 10-year term? How old do you have to? What's 10 years between 18 and 80.
So an 80-year-old could buy a 10-year term?
Well, I'm looking at their stats here, unless they've printed it wrong. They have a 10-year term. It says age last birthday. All the way up. It issues up through that age.
Right.
So.
Right.
Wow.
Okay. Do you have approved materials? Yes, we do have approved materials that you can use to send to your clients. We actually have built an HTML email that an agent can personalize and email to his clients, at least to let them know that there is now a new form of term insurance out there. This is a great review product. This isn't the only term insurance that they should buy, and personally, I'll be the first one to say that where this sell is at $500,000, because that's the max limit that you can buy on this policy. So if you buy $500,000, actually, because it's the 90% rule, you could buy $555,000 of term insurance. At 90%, you'll have that full bucket of money of $500,000. but they still need more insurance, as we saw that one person making $6,000 needed more than $500,000 of insurance.
Joe, I have another question here. It says, did you say 50 years or younger on the no-med? Well, actually, the actual stat here is simplified issue, which is the non-med, will go up to age 50, but it's capped at $200,000. It's
capped at $200,000. Yeah,
so just to make sure that we're
as you get older, you can still get it on a non-med basis, but the amount of life insurance will reduce. In that one slide that we showed you where you're going to receive that email, you're going to see there's an agent guide that you could just click on, and you could read all of the specifics about it.
I think one of our agents who already is writing this says, please describe how the premiums reduce after drawdowns on critical illness or chronic illness events. He says that's super.
All right, so
better talk about that.
You have a $500,000 policy with Alliance Term, and let's say they reduce. You have an episode, and they send you $100,000. Well, your life insurance, and this is part of the plan, your life insurance reduces, right, by the amount of benefit that they paid out ahead of time. Remember, you didn't die.
Right.
You're still alive, and they're taking a part of your life insurance policy and giving it to you. That's that bucket of money.
I love it.
Well, that reduces the death benefit. Well, that also reduces your premium. Okay? So not only do you get a relief of being able to some money to pay your bills, but you also have a reduction in the premium. So that is a good point. So you're not continuing to pay for let's say $500,000 of insurance when you don't have that much life insurance available any longer.
Yeah, I'm looking at this question, and I don't know this one, Joe. I might have to table that unless you know it. It says the guaranteed convertible until what age? This one, that question says convertible up to 79.
Well, I'll tell you what, we're getting some great questions out here, and you may want to bring David Nixick in here too. By the way, David Nixick is here at Brokers Alliance. He is our WRL Alliance expert. A lot of you probably have heard from David. He is, as I want to call him, he's like the shell answer man of Brokers Alliance. He specifically knows these
yeah, in fact,
answers.
actually, I'm looking at their, and Dave can chime in too if he wants. He's out in California. It says the conversion may take place during the initial level premium period up to age 70. It says here, whichever is earlier.
Okay.
So that kind of answers
So
that.
up to age 70, that's pretty good. That's really good. And again, one of the nice things is that these term insurance policies with the living benefits actually can convert to an index UL or a UL with all of the benefits.
Wow.
Okay. Again, we could be here for hours.
So you can go ahead and convert the whole thing and take all those provisions with you.
They're built in. You can even buy the IUL product, right?
You bet.
It's an excellent IUL product, actually. So if you want to build some cash values along with it using indexes, right? Which is very powerful today. I think you did a whole show on our website. You could see a whole week on indexing, how it works.
Our show, and I'm the host of the Quest for Financial Freedom as well. It's 5 days a week. We broadcast it here in Phoenix. We send it out over the web, and we spend a whole week only on indexed UL. So if you have a little kind of interest in that, we can help you out there. Well, listen, Joe, we got to kind of go now. We're right up against our time. Okay. I want to encourage you. Any of the questions that you have here now, we will try to get to you on an email. We'll try to come back to you on it, so don't feel like you're going to be abandoned. We're going to try to answer all those questions that we can, and we want to encourage you to call in and get contracted. That's the first step. You have to get the contracting going, and that's what we want you to do. Joe, any last thoughts?
Is Dave Nixick on?
Yeah, I'm here.
Thanks, Dave.
You're welcome.
Before we wrap up, again, you are working with agents every single day, and I want to let everybody know that David's been responsible for getting the message out. He really is working hard with the agents every single day. And David, I want to thank you for that. You're a wealth of knowledge. You're there to help them. You want to give them your extension and tell them anything briefly about some of the things that you've learned, what agents are doing on this product.
Okay, I'm at extension 139, and in the last 9 months of selling this product, I'm amazed at how much I still uncover about it, and also how succinct it gets. These guys have hit the points very well. This should be in everybody's toolbox. This should be the thing that they are marketing, the new life insurance. It is a door opener for other products. It's only part of your equation. It should be used in every single case, in every single scenario. In fact, I have, it's great for wealth protection. I have a couple of Vermont health insurance agents who are using it, health insurance to help pay their deductibles, because they have very high deductibles there. Wealth protection. Instead of LTC, you can look at this as a way to help as you are in your prime earning years. You can use this to, even if you have a great IUL product that might have some benefits on it, this product allows you to also take care of these issues if something was to happen within your base policy and leaving your wealth creator vehicle intact. Now, real quickly, I've got two guys specifically that are just smoking this thing out of the ballpark. They've done over, in the last 7 months, they've done over $100,000 in paid premium, and they are selling to their existing book of business. That is a very big key here. If you have an existing book of business, whether you are P&C, whether you're health or life, talk to everyone you know about this.
Hey, Dave.
Because this is a no-brainer. Yes.
I'm glad you brought that up real quick, and I know we're running out of time, but WRL is continuing with this alliance term, make it easy to make sales. And what if somebody bought a term insurance policy in the last 3 years? Talking about, and jog my memory is what you said is about going back to your current clientele. What if somebody bought a term insurance, or an agent sold the policy to somebody in the last 3 years? Didn't have to be WRL. What happens?
Well, that's a really great point. I'm glad you brought that up, Joe. They have a program called the Head Start program. This Head Start program allows you to convert or get additional insurance based upon the existing policy you have that is 3 years or newer. So in other words, let's say you have a Prudential policy that's $500,000. You can convert that up to $500,000 if they are standard or above, and get a standard plus rated product without any medical at all. It's just an MIB, MDR, and a
script checks.
Script check, and that is it. And that's about a 4-day turnaround, Joe.
So if I have $500,000 of term insurance with a major carrier, and I bought it 3 years ago, I could buy up to another $500,000, or if I needed to replace that, and I could do it completely. Do I need a swab?
No swab.
It's just the face page of the policy, and it shows standard or better, and they turn it around in 4 days. Now that's I think that's where that group is probably really capturing the attention of their clients, offering better, more well-rounded, bundled benefits.
I love it.
For a good price. Well.
Now we're up against the clock. We have to go.
Sure.
I want to thank you all for attending. And again, we'll have this out on our web so you can watch the whole rebroadcast of it. It's out at www.brokersalliance.com/webinar. V as in victory, webinars, plural. So if you want to check it out next time, Joe, thank you for your time. I mean, really, you're the one that's pushing this. We want to thank all our attendees. Thank David out in California, and of course our engineers and staff that have helped pull this off. Thanks very much.
Thank you.